isolation of, putting all the other assets aside, we believe Bitcoin disrupts gold. We think it's a better gold if you look at the properties of money and what makes gold scarcity. Bitcoin's actually fixed in supply. So it's better than scarce in gold. It's more portable. It's fungible. It's more durable. It sort of equals or better gold across the board. So if you look at $100 billion market cap today, now last week it might have been more like 200, but so it's actually a buying opportunity. We think that there's a potential appreciation of 30 to 40 times because you look at the gold market today, it's a $7 trillion market. And so a lot of people are starting to see that. They recognize the store of value properties. So we think regardless of the price moves in the last few weeks, it's still a very underappreciated asset.
And Bitcoin's just the first cut. If Bitcoin's a better gold, imagine your financial system with only gold as an asset class. That's how sort of early in the beginning of this is. There's going to be a menu of many cryptocurrencies, and they're going to rethink the entire internet and how we sort of view it. You could never buy a piece of the internet back in the 90s. You couldn't buy the protocols. You could invest in a VC firm on Sand Hill Road that had to pick Amazon versus pets.com. So you had to get lucky. You had to be very privileged and get lucky many times to get it. Now you can just buy a piece of the protocol. So buying Bitcoin is like a call option on the entire Bitcoin ecosystem. A Bitcoin company will not work out before Bitcoin works out itself first. So the ultimate Bitcoin bet is Bitcoin, or the ultimate Ethereum bet is Ether. And you're basically buying a piece of the racetrack, and you're not picking, Seabiscuit. Doesn't matter who wins as long as the races are running. You're a part of it, and that's the beauty here. And usually, the retail investors come in at the end. They get dumped this stuff post IPO, 10 years after a company was founded. Now retail has been the ones who have been there first. And actually, Wall Street is completely asleep at the wheel and late to the game. Silicon Valley has actually completely missed it too. People in Silicon Valley and the companies have maybe personally got it. Some VCs have personally invested in coins, but they structurally were unable to had to invest in C Corps. And so buying gold or buying Bitcoin is not something they do, but the partners were investing their own money. And Silicon Valley very much missed cryptocurrency because they want to miss it. It's not good for the centralized application layer, the FANG companies that sit on top of the internet. Cryptocurrencies actually decentralize that, pull it all down to the layer below, the protocol layer, and the value actually accrues to the people who buy into and use and build the network. Not one company. There's not a headquarters of Bitcoin or Ethereum. These are networks that are decentralized and owned by, in a very democratic way, the users of them.
Very interesting video, and I want to bring up that, I'm very bullish about cryptocurrencies. Obviously, the market cap has kind of recovered. It's about to hit over 400 billion, but I really like this idea of the issue is like a lot of technology, a lot of stocks that you could buy. It's a few people really control everything, and a lot of the wealth, for example, Amazon, like a lot of people use Amazon, but most of the wealth is being transferred to Jeff Bezos, who I think in like 23 days just made $15 billion. And with cryptocurrencies, because Wall Street isn't set up, and because it's the actual people can buy directly without these funds getting in the middle, you can be, an actual owner, and there is no CEO of Bitcoin. There's no CEO of Ethereum that, controls the currency to the way that, stocks and bonds are kind of set up. And I really do believe that, cryptocurrencies is a great way where, the wealth and the profits can be more democratized and better spent and spread around. If you look at a lot of these Wall Street assets, the only people that really get rich off of the, stock market are, a lot of these, funds that, they have a lot of control, a lot of strength, where, even though the market is a little volatile, I still believe that if you long-term believe in the technology of cryptocurrency, it will not only replace gold's market cap, which is over 10 times what the current market cap is for all cryptocurrencies. But I think that it will do a better job of, basically paying out investors and bringing wealth to them. Our stock market, I mean, it's a good way to make money, but I'm pretty confident that most people that don't understand the stock market, they've been getting crushed with these cycles. And I feel like, cryptocurrencies is a great hedge. And like I said, I wouldn't ever put your entire portfolio into cryptocurrencies, but I do believe that if you're doing any kind of investing, you should have at least a 5 or 10% exposure to the market and learn about it, learn more about the technology. And I really do feel like this new digital asset class will not only solve, a currency or, some of the minor issues, but a lot of global problems and a lot of the inequality issues that we do have today. So let me know what you guys think. I'm really, really interested on, the Winklevoss twins, obviously have a lot of interest in pumping Bitcoin's price because they are one of the first founders. But I'm not a big fan of Facebook, and it would really make my day. And I know it'd make a lot of people's day to see the Winklevoss twins have more money than Zuckerberg. If you've actually watched the movie Social Network or know anything about it, it's just funny how Zuckerberg cut them out. They got, I want to say a little bit over 100 million for their settlement, maybe under actually, and they invested in, Bitcoin. And it would be very interesting if they're able to overtake Zuckerberg's wealth, but only time will tell. But let me know what you guys think of the video, and I will talk to you guys soon.